What's up, traders? I'm Hotshot. I am not an educator. My educator is ICT. For free education, check out his YouTube channel, The Inner Circle Trader. With that being said, this channel and video is for entertainment and my own learning purposes only. This is not financial or trading advice. I am not a financial or trading advisor. Please trade at your own risk. Now, in this video, I do want to recognize that my most popular videos on this channel are the daily bias strategies and the daily bias checklist. So I'm going to go ahead and start overpopulating this channel with daily bias backtests on different pairs, different assets. So that way we can all train our eyes together. We can all get a better understanding of how to approach the daily bias and how we can get a better read and, be confident with what we think the next day is going to present an up close or a down close candle. So first, to start off, what is daily bias? This is the next draw on liquidity. You want to try to get a read on where price is more likely to draw to next. Is it going to draw higher to an old high or lower to an old low? And until it reaches that, you stay with that bias. This allows us to go in each day and anticipate either an up close or a down close candle in alignment with that bias. So today we're going to go ahead and do this on GBPJPY. I almost said GBPJPJ. Anyways, GBPJPY, we're going to delete everything on here. No indicators, no nothing. We're going to go ahead and do this. If you're wondering what these are down here, these are just opposite charts, the dollar index and, your JPY. I use these other charts for smart money technique or smart money tool, SMT divergence. I'm not going to go over that in this video, of course. I just wanted to go ahead and clarify that's what that is down there. Anyways, so if we scrunch up the chart, if you notice right now, we literally have no idea what price is doing, right? Everything is just scrunched up. You can't see these candles at all. Well, now we're going to go back in time. We literally have no idea what is going on. And if you tell me you know what is going on, you are a liar, because we have no idea what is going on. So I'm going to take the replay tool. I'm going to go ahead and just go to a random point in time. Looks like we brought ourselves back to April 30th of 2021, a couple of years ago. So I'm going to go ahead and restart the chart. Now, from this point, we literally have no idea what price is going to do over here to the right. We have no idea where we're at. Now let's go to daily bias. So to read daily bias, first you want to identify the most previous run on liquidity. This is an obvious swing high or swing low. And from that point, you want to recognize what phase daily price is in. Is it retracing, reversing, or expanding, which ICT says is spooling. And this is actually the best phase to go in and hunt for what's going to be explained below here. So, and if none of these three, it's deemed consolidation. And until we can recognize a different phase, our bias will be neutral. But this will allow us to know what kind of candles to anticipate. The current phase you are in is your bias. So from that point, you want to first identify the most previous run on liquidity, okay? Where is the most previous run on liquidity? Well, we see that price swept out liquidity here, made this higher high. It's not the most previous run though. Okay, this is how we get to it though. Swept out here and made this liquidity now. Okay, and it made some liquidity down here. Okay. So from here, it dropped down and started consolidating on the smaller time frames. And you could see like this consolidation creating like some equal lows right here, got taken out by this candle and taken up. That's a intraday move on lower time frame. But you can see right here, this was liquidity. That's an obvious swing level right there. It got ran out. And you can see that this was liquidity right here, which got ran out. And this right here, this leg was the most previous run on liquidity. So right here, this, if we delete everything else, we just pay attention to this right here. This took out liquidity and this This is a reversal leg. Why is this a reversal leg? Well, this is an expansion, retracement, and then it went ahead and did like another retracement down, and this reverse price back up. So this was an expansion. This is just trading within this range right here. Okay. This is all just trading within this range, right? So that's why this is a reversal leg. Okay. So this is a reversal. After reversal can come in a consolidation, then another expansion up, or it can come in like a retracement into maybe this fair value gap here where it's already at, and we can see some expansion back up, or price can come all the way back down here and do another market structure shift. This is a market structure shift point. This is a market structure shift point. Why is this a market structure shift? Well, ICT explains in his 2022 mentorship, and you could go watch that for more clarification. These three candles right here, gosh, that's a horrible drawing. It's this candle, and this candle. Notice how these two are both lower than this wick. These two wicks are both lower than this wick. This creates a swing high. Same right here. These two wicks are higher than this wick. This creates a swing low right here. So whenever that happens, price, once it takes it out, and it doesn't even have to be by much. It could be a whole wick. It doesn't even have to close over that high. That's a market structure shift. Okay, so you can see that price shifted, and as long as this low holds, these fair value gaps hold, we can see higher prices to continue back up. And what will it continue up to? Potentially this high right here. So right now, price, let's go back to daily bias and explain. So you want to mark out obvious swing levels, not the little minor swings, and fair value gaps for price to target in its current phase. This is your draw on liquidity, your daily bias. So our draw on liquidity is up here, and this is now our daily bias. Our daily bias currently, if I go back right here, sorry, I'm kind of going over my words a little bit. I do want to read this to you. Anytime that daily runs out sell side or buy side liquidity, price is likely to either retrace back into the range toward internal liquidity, like an internal swing higher low, or fair value gaps, which in this case, you can see we have a fair value gap here. Or it'll reverse, make a market structure shift with displacement plus a fair value gap, or consolidate, like I told you in the beginning. Then continue expanding. So in this situation, we will wait for a 3-candle swing low or high to form. Then that very next day, the 4th candle, we will go in and target the previous day's high/low and hold this new bias and begin from step 2. So now that I read that to you, I do want to point out how we do have this, like I just explained to you. You see how the wicks, boom, boom, are lower than this wick? This is a swing high right here after a run of liquidity. Okay, market structure shift, swing high created. So this 4th candle, we would expect it to open, due to swing up, and create the wick of the next candle, which is Monday. You can see that it's Monday. This is Friday's candle. You can see that Monday is right here. We want to see it go up and then come back down and ultimately take out the low of this day, which I believe it'll get taken out quick because that's where we're going to be opening at anyway. But we want to see this high of this candle get respected, right? And I can just read that to y'all in this step right here. So right now, price in this case now is bearish because now after the reversal, we can anticipate a retracement phase. So right now it's retracing, it's down. Ultimately, though, price is bullish. Okay, so once up close candle or something gets violated, and we'll get to that point, then we'll switch our bias back to bullish. Excuse me, but for now, excuse me, if price is bearish and the previous day was bearish, then the next day that we trade, we expect the previous day's low to be taken out and the previous day's high to be supported. In other words, there shouldn't be any movement above the previous day's high. Now, if price trades above the high, 1 second. My apologies, just had a little interruption there. Now, just to resume what I was speaking of, if price is bearish and the previous day was bearish, then the next day that we trade, we expect the previous day's low to be taken out and the previous day's high to be supported. In other words, there shouldn't be any movement above the previous day's high. Now, if price trades above the high, you want to wait for that day's candle to close. If it closes back below the high with a long doji wick or something that doesn't show any significance of going up, then hold the same bearish bias to trade toward the swing liquidity from step 2 that we marked out. But if it closed above the previous day's high with the big bullish candle, then bias may be flipping, so go neutral. And we want to remind ourselves, not every day is going to be a down close candle, so we will hunt intraday with that in mind. And if a buy opportunity arises counter trend to this bias, we can dial back our risk or just not trade it. It's probably best to learn to ignore these counter trend setups. But this step lets us know what invalidates our bias and idea. So if we go ahead and show that right here, I will delete these reds right here. You can see that this is the high that we expect to be supported, and this is the low that we expect to be broken. So we want to see the open, we want to see the candle wick up, take it down, and the distribution. Okay, so it'll be open, manipulation, accumulation, in other words, the Judas swing. It'll sell off, and then distribution will happen at the bottom of the wick, and then price will close. And then from there, we potentially would want to see price, create a swing low of like 3 wicks. Then we can anticipate that fourth candle to go up. But let's see how this next candle opens. Okay, so the low didn't get broken, but the high didn't get broken either. Now, in this situation, I do have it written. Very rarely do you see the previous day's high or low not traded through the current day. This is lower time frame consolidation and a retail squeeze pattern. Okay, so before a breakout, and the side it breaks out will often become our bias to trade toward more liquidity. Okay, so in this case, you can see that there's relative equal lows down here, and now potentially we could see this high get respected. Possibly we could see maybe an open, a small little wick up, get respected, and then ultimately come back down and take out these equal lows. Or, we could see this next candle open, take out both of these highs and take out both of these relative equal lows right here, and in that case, I also have it written, very rarely do you see the previous day's high and low both traded through. If it does, it's usually indecisiveness, where it's going to be a reversal soon, and it's clearing the board on both sides of the marketplace. So when you see this, you want to prepare yourself for a potential reversal. So bias in this situation will be neutral. Our idea is invalidated. We will then redetermine the phase and where price is now headed. Okay, so let's go ahead and play out the next candle. Okay, so it took out this one right here, but you can see how I said, like in this one right here, if price trades above the high, wait for that day's candle to close. If it closes back below the high with a long doji wick or something that doesn't show any significance of going up, then you want to hold that same bearish bias to trade toward the swing liquidity. So we're going to hold the same bearish bias because you can see it did trade up, didn't close with the big significant candle. I know I made a long wick here too, but for me, this candle is still indecisive as well. So I'm going to hold the same bearish bias. Okay, same thing. Made a long doji wick up. No, not much significance, but look at all this liquidity that's building up below these lows, right? There's liquidity building up below these lows, and all this liquidity was taken out here. And this is the high now that we expect to be supported. And hopefully all this can get taken back down into the FVG. But also, if you notice, there's something we also got to pay attention to that I just missed as well. We just seen a swing low. So this candle, we did expect it to open, make a small little wick and trade up. So that could have been a buy opportunity that we missed. But at this point, we could possibly start seeing some more buying opportunities. Now that I correct myself, and this is where that's my mistake, y'all. We were following it for bearish. It was making long wicks up. In this situation, it could be neutral, but you can see that we did make that swing low right here. It did make a little bit of a bullish move. Even though it made a wick up, it did have a bullish opportunity in there sometime intraday. Okay, so it's possible that price can either come back down here and take out all this liquidity back into the fair value gap, or we can see this open, make a small wick down, but ultimately have this price supported and then take out this high here and potentially take out this liquidity here. Let's see. Okay, so you can see right here, there's a 3 candle swing right here, a little high right here created. This high was not traded through. The low we expected to be supported was traded through. So in this situation, we expect this next candle to open, swing up. Let me just delete this. We expect it to open, Judas swing, manipulation, accumulation up, sell off, and then distribute down here. And we expect this low right here to be traded through and this high to be supported. Okay, so let's see what this candle does. Okay, so it traded within. And remember what this is. Again, this is lower time frame consolidation and a retail squeeze before a breakout. The side it breaks out will often become our bias to trade toward liquidity. Okay, so let's see if it breaks out down back towards this fair value gap. Let's see. Nope. Instead, what it did was it squeezed out. This was the breakout, like we said. Right here, we were wrong. We did expect it to come back down, but again, it was still it was in bullish. You know what I mean? It was bullish. Market structure shifted, retraced into the fair value gap, created the 3 candle swing. Right here, you can see that it traded up. And ultimately, there was probably like a lower time frame fair value gap or like a lower time frame order block, like 4 hour or 1 hour that was within this leg right here that price retraced back down into. But at this point, from this fair value gap, it did take off bullish. And once it came back into this fair value gap, you could have went down to the lower time frame, maybe the 1 hour, if you like 4 hour, or if you like 15-minute, you could have totally went into that, and you could have looked for an opportunity to buy. And ultimately, yes, we were wrong. I was wrong. I was anticipating something to come back down into the level maybe, because I was just following the candles, of course. But at this point, I do want to remind ourselves that we want to get over the concern about being right every time and put aside the idea of perfection, because you're not going to have it perfect. You're not going to get in perfectly, get out perfectly. You're not going to have the perfect risk, the perfect asset, etc. You will always find reasons to be wrong. Want to embrace imperfection, embrace the idea that you don't have to know everything. You don't have to be right, because being right is not equivalent to being profitable, and that's important. These are the words of ICT. Okay, so at this point now, like I mentioned, squeeze before a breakout. The side it breaks out will often become our bias to trade toward liquidity. So you can see that it took out liquidity right here. It hasn't created a 3 candle swing. we can anticipate maybe an open, a little Judas swing down, the manipulation accumulation to buy in, potentially take out this high here, create another high wick, or we can see it create like a lower wick, and then that'll be like the swing high, and then it could create a big fair value gap right here as well. So we expect if we delete everything here, in the bar charts a bit, we expect this low to be held and this low or this high to be traded through. Okay, this is our liquidity to target for this new trading day, which is Tuesday. Okay, let's see what happens. Okay, so it traded within it, and here's a swing high right here. Okay, now with this swing high, we can potentially because again right here, anytime daily runs out sell side or buy side liquidity, price is likely to either retrace back into the range toward internal liquidity or reverse or consolidate. So in this case, you could see that it created this big daily fair value gap right here. So what we can see is potentially this new fourth candle to open, Judas swing, manipulate, and accumulate up for some shorts, sell off, take out this candle's low. We want to see this candle's high be supported, potentially this candle's high be supported as well, and then come into the fair value gap where we can look for some more longs. Let's see what happens. Okay, so didn't happen at all. Again, we want to go ahead and get over the concern about being right every time, put aside the idea of perfection, because you're not going to have it perfect. You're not going to get in perfectly, get out perfectly, not going to have a perfect risk, a perfect asset, etc. Always find reasons to be wrong. You want to embrace that imperfection. So right here, you can see that created another high, took out these ones right here. So now price is still in this bullish expansion. So we do want to see this low be supported and this high be taken out. So we can see an open Judas swing manipulation down. And right, this is the accumulation of longs, expansion where price will spool up, take out potentially this high, and this will be the distribution. Okay, so let's see what happens. Okay, so it took out the low here, but remember right here, I apologize once more. I had just another interruption. I do want to continue going through this back test. We do see that price did trade through the low. It did not trade through the high. It did close with the long doji wick, and in this case we would hold that same bullish bias, but at the same time it also created this swing. So we could potentially see price open, Judas swing, manipulate up and accumulate some shorts to sell off and then distribute down here. Or we could see it continue up. In this case, you could be neutral. But in this case, I am going to be expecting it to sell off. Okay, because I do expect it to start retracing back into this fair value gap. Because this has not been tapped back into. And of course, we know that price loves to come back into these areas. So we will go ahead and expect a sell. But then again, on intraday, you can potentially catch a buy opportunity and a sell opportunity. So you can keep that in mind as well as you hunt intraday. Let's see what happens though. Okay, so it closed within this high and this low. Take this one off. Oops. We have this low here. We have this high here. You can see that it closed within it. Now this right here, like we explained earlier, this is lower time frame consolidation. This is potentially a squeeze pattern, and we could potentially see a breakout maybe to the upside. And that'll be, our bias, but it could break out to the downside. So we could tap this fair value gap before continuing up. So we will see what happens with the next candle. At this point, you can be, bearish or bullish or neutral. It's totally like it's how you feel based on the lower time frame. If you go to the lower time frames and you you use the Asian range, the London kill zone, let's say you trade New York kill zone like I do, You can understand what liquidity was taking out in the London kill zone, what if it took out like an Asian range's high or a low, and then you could see what the London did during that time. And then once New York approaches, you can see where you're at within the daily candles range and see what's setting up. Is it like an optimal trade entry to go short and you're like in the middle of the daily candles range? Then you know what I mean? If it's setting up a buy opportunity to go long and you're in the middle of the daily candles range, then that's perfect. You know what I mean? Because it's likely that the daily candles high and low for the day has already been currently made and you're trading in the middle of it, like you're you know what I mean, and you can expand to either one. You know what I mean? It depends on what setting up on intraday, 1 hour, 15 minute, 5 minute, you know what I mean, whatever you trade. But we're just doing this, you know what I mean, obviously based off the daily. And that's just, I just wanted to clarify that you could go to the lower time frames and you can hunt both a buy and a sell in situations, you know what I mean? So let's just continue. Boom. So it took out the high here, it respected the lows here, it's creating higher lows. And at this point, we can expect this open Judas swing, manipulate and accumulate longs to buy and then distribute down and ultimately take out the high this candle. And we want to see this low get respected. Let's see what happens. Boom, exactly that. So we opened, we didn't create a wick, but it definitely went up long and there was an opportunity in there. Now we want to see same thing next day. We want to hunt a long. Okay, we want to see this low be supported. We want to see an open, maybe a little wick where we could get in long, an accumulation of longs, buy up, and then take out this high where we could distribute and get out of those longs. Let's see what happens. Nope, it created a swing high right here, and it actually took out this low right here, took out this low right here. So at this point, swing high, we could potentially see it come straight back into that fair value gap at this point. So we're just kind of flowing with order flow and and the candles, the swing highs, swing lows, and all that good stuff. We're just flowing with it. So right now, potentially see price open, manipulate, Judah swing up, where we can see an accumulation of shorts, sell off, where we can take out this low, distribution, where we can get out of the shorts and exchange them to willing buyers at that point. So let's go ahead and see what happens. So we open, you can see that there was a wick creation up. It did sell off. It didn't take out the low here though. But ultimately it came back up and it closed up here. So it gave you a short opportunity, it gave you a long opportunity, but ultimately it traded within. So let's see what happens. Maybe we could see this low get taken out and this high gets supported. We can see open, Judah swing, manipulate up, and then take out these lows into the fair value gap and see what happens. Nope, what it did was it took out this high, but it's still within the range of this one. It took out this high, but it closed with the little it closed with the wick, and this doesn't show any significance of really going up. So we're going to hold that same bearish bias to kind of go down, and potentially we could see this low as well get taken out into the fair value gap down there. Let's see what happens. Boom, we've seen that low get taken out. Now we can see this candle potentially open, Judah swing, manipulate up, accumulation of shorts, sell off, take out these lows right here, potentially tap into the fair value gap, and then distribute out of the shorts. Let's see what happens. It took out the high right here, still within the range of this candle, and it took out the high right here as well, but you could see that no significance. It just closed with the long doji wick. No significance of going up. We're still holding the same bearish bias. And with this candle, you can see that it closed within the range here, within the range here. And so at the same time with this one too, you could see that it's like a lower time frame consolidation. All of this is kind of like lower time frame consolidation within the Wednesday. But we could still see maybe an open take out the low into the fair value gap. Let's see. Nope, it broke out. So at this point, now that it broke out, we could see this candle open, Judah swing, manipulate down, and accumulation of longs to take out the high of this candle. And ultimately, it would be creating like a big fair value gap. So this next day, which is Friday, we're going to look for a long. So what happened was it opened. It did give us that long opportunity where we could have went long, and then it did come up. It did not, I don't want to say it took out that high, because the high here, if you look right here at the H, the high was 156.073, 156.076. So it did not take out that high. This candle's high was lower than this one just by 0.003. So didn't take out that high. It did create like a swing high right here. So potentially this next candle, we can anticipate it to open, Judah swing, manipulate up, and accumulate some shorts to sell off, take out this low right here, and tap into this big fair value gap and distribute out of those shorts. And then that next day we could potentially see, prices going up. Let's just see what happens. Boom. So that's exactly what happened. We opened, Judah swing, manipulated up, accumulated some shorts, and then we sold off, took out this low, and we distributed out of those shorts, tapped into the fair value gap. Now, once we create a little swing right here, we can see price potentially take out this one and continue bullish. Okay, let's see what happens. Tap back into it. So since it didn't create a swing yet, of course, we would still hold this bearish bias. We would still want to see price open, manipulate, Judah swing up, and accumulate some shorts to sell off and take out this low. And same thing with this candle. Since it closed down here, we want to see it open, Judah swing, manipulate up, accumulate some shorts, sell off, take out this low, and then distribute out of those shorts. Let's see what happens. Well, it created the wick. Did it take out the low? It did not take out the low. It created a swing low. So this next day, we can see it open, Judah swing, manipulate down and accumulate some longs to rally, take out this high, and then distribute out of those longs. Let's see what happens. Boom, exactly that. Beautiful. And now we could potentially see it take out these highs right here. Let me just play it out. Came back into the fair value gap. Nope, it went all the way back down. And you know what? I'm going to end this video off right there because I know it's already long, but I want to remind ourselves we want to get over the concern about being right every time and put aside the idea of perfection, because you're not going to have it perfect. You're not going to get in perfectly, get out perfectly. Not going to have the perfect risk, the perfect asset, etc. Always find reasons to be wrong. You want to embrace the imperfection, embrace the idea that you don't have to know everything. You don't have to be right, because being right is not equivalent to being profitable. And that's important. But using, these steps and approaching your daily time frame literally like this, you could see that there was a lot of opportunity that we took advantage of. And there was also some losses that we possibly could have lost. But again, you can hunt intraday with a lot of this in mind, and you can go in intraday and you can possibly get a buy and a sell like ICT does often. Not saying that you should, but if you know what you're doing, you can totally do that. And this is pretty much like a rules-based approach. It's very systematic. It's a model, and it's taken straight from ICT. These are from his, ICT daily bias videos, like his older videos and even newer videos, and just compiled all together. And you can see that it does have a little bit of, opportunity, and you can take advantage of that opportunity for sure. But I hope y'all learned something. This is GBPJPY backtesting the daily time frame. This whole time we were bullish and we were looking for that bullish, but whenever price, changed, we looked for some bears, and we just wanted to flow with the daily time frame. And that's really all it is flowing with the daily time frame and knowing what your daily time frame, what phase it is in. So I hope you learned something. Again, this was for only entertainment and learning purposes, my own learning purposes. But if you enjoyed the video, make sure you leave a like. If you're not already subscribed, make sure you click the subscribe. And until next time, we'll see you guys in the next video.